What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented to trade any company that's publicly traded on the U.S. stock market. So make sure to hit that like button if you enjoy this video. It really helps the channel grow. Thanks again to all of those who continue to tune in. Make sure you also hit that subscribe button if you haven't already, and the notification bell. That way you are alerted when we release our bonus content. Tonight's video is one of our nightly or weekend videos. Well, it's a nightly video, but the nightly and weekend videos focus on identifying triggers and targets for scalps and intraday plays, all the way up to swing leap trades as well. So if you want a deeper dive into exactly how we set up our charts, the color coding for the different time frames, the different levels and broadening formations we use, make sure to check out the bonus content on our YouTube page. And for more information about the strat, which is just the base of our trading method, there's more free information about that in the description of this video as well. So I do encourage everyone to watch the full video, because along with just the triggers and targets, we also have some good insight into the price action on all time frames. So let's go ahead and take a look at the agenda for today. First, we're going to recap today's price action, and then we'll zoom out and look at the week, month, quarter, and year. Pretty important with today and the price movement that we had. So I want to make sure that we are level set, not too zoomed in. Then we will zoom back in and look at the 4-hour markers and the triggers and targets for Wednesday, October 5th, along with the quick review of the triggers and targets for the week, month, quarter, and year. All right, so getting into the intraday chart, I've got it, the 5-minute on here. We're going to talk about the scalping perspective first, right? That's the what a lot of people like to do at the beginning of the day before any real trend has been set, and this is where our proven and repeatable strategy does come in. So we've got our 4-hour markers on the screen here. Top right hand part of the page or the chart is the previous high day at 50.19. We've got the overnight high at 48.82, previous low a day at 48.03, and then down here we've got overnight low at 44.20. So those are the normal 4-hour markers. Some levels of note are 49.49 up here. That's the week and month flip. So as long as price is below this level, the week and the month are red. And also want to bring into the picture the 50% of last week. We talked about this in yesterday's video. That's this purple dashed line that we've got here. And then the white dashed line we have here is the 50% of last year. So we talked about how that could be a major support or resistance area, right? And that's what we got today. We got the open here at 47.77. So we gapped down into the gap that we left from, what was that, Tuesday, Wednesday of last week. And slight push down, but then we pushed up over opening print right to that last year's 50%. Got an initial rejection off of it, and then we got this basically a double top with the lower high here. So we added a little bit of nuance to the proven trading method, right? So normally we look for higher lows at or above opening print to get into calls, or we look for lower highs at or below opening print to get into puts. Well, here we're just taking into account, some major levels, right? We're coming up to that 50% line of last year, which was a pretty good point of resistance in the past month or so. So, looking for it to be support, but since we gapped down past it, it turns back into resistance. So we went ahead and entered on some puts here, real light, just a few positions, a few contracts. And the expiration was for next week, right at the money. We did end up getting a lower high, lower low, lower high, lower low, lower high, lower low. We did get a higher high here, but we wanted to see if we were going to get, the lower low to make like a broadening formation here on the 5-minute. And it ended up, we just fell out, and we were that close to the opening print that we also wanted to just, risk to reward was still there. So we stayed in, and it was beneficial to us. Right now, if we pushed back up to last year's 50%, we could have just stopped out. No harm there. But we were kind of lucky. We were able to, or the price action did roll back over, push back to opening print, played around there for a little while, finally closed the gap, pushed back up to opening print, and continued to stay down, right? So we held those puts through the whole day, unloaded at the end of the day, and left one runner. We do have AMD and Micron, I believe, earnings after hours, so don't want to hold too much, too many short-term contracts overnight. If it gaps down again or it gaps up, that's fine. We'll just go ahead and make our entries based off of our triggers and targets from our notes on the intraday price action tomorrow. You don't have to be at the bottom or the top of every move, right? As long as you get a majority of the move and there's a decent magnitude there's still plenty of money for you to make. So we did push down at the end of the day into that gap from last Monday. So I wouldn't be surprised if we, fill that tomorrow. We did come right to this 50% of last month as well. So, starting to roll over a little bit on the I don't want to say micros, but the 1 hour, 4 hour, 1 day, starting to look a little bit more bearish. But again, we're not breaking down from a week, month, quarter, year perspective, which we'll look at here in a second. So nothing to be too afraid of, but it's just another way that you can add a little bit of nuance to the proven method that we use. Now, if you wanted to wait until we were back under opening print, that still would have gave you some pretty good money, right? Here we have, a high and then a lower high, basically equal high, double top with slightly lower high, and then a lower low. So you could have entered right here, rode this for the pushback up to overnight low, and rejection off of that pushed us down into the end of the day. So still could have made a decent amount of money here if you waited for the more traditional rules and not added the little bit of nuance in there. Looking at it from the 4 hour perspective, the day perspective, because we talked about this yesterday. Let's go ahead and bring this up, and we can see, that's in there we go. We can see we talked about yesterday how we could get, let me make this bigger. I forget sometimes that people are on phone. So just looking at the candle structure, we talked about yesterday how we had the 3 in a red 2 up, which was a pretty good setup for a 3, 2 up, 2 down. Now the magnitude of that move was the low of the 3. So we obviously gapped past that, but that did trigger the 3, 2 up, 2 down, reached its magnitude, and then continued to push down, right? So we did get that strat reversal, even if it was overnight. So if you had prepared, yesterday, or on Monday night, or the end of trading on Monday, and grabbed some puts for the possible 3, 2 up, 2 down, then you were very well rewarded today with the gap down and the further push down that we saw. All right. Now from the week perspective, again, we don't want to get too carried away with anything, because it's just a simple 2 down, and we have all this room down here that we can put in a higher low, right? So this is the pullback that we've basically been asking for. Take out the gap that we had here, and then hopefully take out this gap here, so they're no longer on the table as acting as magnets for us, and we can get back to maybe filling the gap that we left from Monday night, Tuesday morning, and continue to push up. But again, we were at these extended, extensions here. This is the 100% fib extension of the bull flag from the April lows. So, we definitely reached that, almost hit the 138.2. So with last year's 50% right here, some of these weekly broadening formations, we've got to expect, a little bit of chop and, a fight over these price levels. We've been in a nice push up over the last, 1, 2, 3, 4, 5, 6, 7, 8, 9, or 8 weeks, right? That's kind of contesting the 9-week uptrend that we had from the April lows, right? And then we went sideways for a couple of weeks before we pushed back up. So, again, not the end of the world. From the week perspective, things are looking real nice still, right? From the month perspective, a little bit different, just because we just started out the new month. So it is red, but we're still inside and in the upper half of last month's price action. So, not crazy bullish, but, not bearish by any means either. So even if we would fill this gap and not go too much lower, that's still a pretty, it's more bullish leaning than bearish leaning, right? So even if the candle is red, we can continue to push up. You can see to the left here, we had the push up, the red candle, and then the continued push up. So, again, not the end of the world from the month perspective. And again, even if we do go 2 down on the month, there's still a ways to go before we would make a lower low on the month. So the uptrend is still pretty much intact. The quarter chart, which if you're familiar with this channel, everybody knows I like this chart the best. Getting some pullback here. Getting some pullback here. So we're still in force with the 1 combo 2 down, combo 2 up, right? We're still above this 36.15. We're getting some pullback, not the end of the world, right? So just want to continue to reiterate that from a long-term or higher time frame perspective, nothing's totally breaking down. And even on the year chart where we had the 1, 2 up, 2 down, we still set a higher low here, and we're able to take push back up, get a green handle, pretty hammer-esque right now. A little bit of wick on top, but not the end of the world. So, want to continue to push towards the high of this candle towards the end of the year. That way, we have a better chance of going 2 up next year, triggering the 2 down, 2 up with the magnitude of 70.08. So, familiar with this channel? If you are familiar with this channel, then none of this is new. But for those who are new to this channel, that's what we got from a higher time frame perspective. Let's zoom back in here now and take a look at our 4-hour triggers and target. Our 4-hour markers, so that we can set our triggers and targets for tomorrow. All right, so we can see on chart here. Let's bring this down a little bit. Again, trying to make this big enough for everyone to see. We've got our previous high day up at the top here. Basically coinciding with last year's 50% line. Right now, the overnight high is 43.34. The previous low a day is down here at 42.53. And make this a little bit tighter. And our overnight low right now is 41.72. Now, that does bring into focus this market maker's expected move low of 41.87. If you're not familiar with this market maker's expected move, then make sure to check out our weekend video where we talk about the market maker's expected move for the week, where to get it and how we chart it and all of that good stuff. But you can see the overnight low is pretty much even with the market maker's expected move low. So maybe that's the bottom for overnight. Who knows? But we've still got this gap down here that we can fill. So again, market maker's expected move is not an end all be all, right? We've gone past the edges of the expected move in weeks past, over the years, plenty of times, right? But there's a 70% chance basically that price action will stay within the market maker's expected move. So we do want to just keep in mind that this could be a bounce point. It lines up pretty well with the bottom of the gap. So if we do get this gap closed, be aware that we could get a bounce at that point. All right, now just to bring back into focus the repeatable, improving strategy that we use. Let's say that this is the bottom for the overnight, and say overnight we get a little bit of a push up, right? Let's say overnight pushes up to here, and that's our overnight high. But then tomorrow, by the time price opens, we pulled back in and we open in the middle of the overnight range, right? If we open here at 43.55, or not 43.55, but just in the middle of the range, that gives us 2 targets to the upside, and as well as 2 targets to the downside, right? So the targets, if we're getting into calls, right? If we open here, we push up, say we get a rejection off overnight high, and then we pull back down, but we get a higher low here above or at opening print. We want to look to get into calls. Our first target is this overnight high. Second target is previous high of day. Right, on the other side of the coin, if we open here and we push down, say we get a bounce off the previous low a day and we push back up, but then we reject and get a lower high at or below opening print, we want to look to get into puts. First targeting, in this case, it would be previous low a day because it comes before overnight low. But the second target for those scalps would be the overnight low. Now, if price continues to move in the one direction or the other, we then turn to our notes and look at our triggers and targets from the 4-hour and the day and so up. But for as far as like a early morning or beginning of the day, it doesn't have to be right at open, right? But more towards the beginning of the day before, try and get an edge on which direction price will go. This is a very good strategy for high percentage winning trades, right? As long as you're following those rules and you stick to them, then you may have some times where you have take slight losses, but in the grand scheme of things, over time, you normally end up winning more than losing, right? So, and then if you're choosing contracts that are, have good delta theta, where you're at or in the money, especially if you're getting multiple contracts, get some pretty good profits there, right? So let's look at the 4-hour perspective for more of an intraday trade or longer intraday trade, possibly full day trade, maybe even overnight swing if you so desire. But let's take a look here, try and make things a little bit bigger for those on phone. But we had a two down continuation today, right? So the first 4-hour candle and the second 4-hour candle were two downs. We're out of any kind of reversal from a 2 to 3 candle structure perspective. At this point, we're just looking more at levels of support and resistance. So if we do push down below Tuesday's low, or the low of the second 4-hour candle of Tuesday, we've obviously got the gap fill, and then we've got a couple of levels here below that we can look at as possible bounce points if price is going to turn around and go back up, right? We did go 2 down on the week again, remember, so we do have the magnitude for that. So there's plenty of that on board. But from the 4-hour perspective, no reversals here to the downside. We're just looking for the gap fill and then possibly the bounce off of the 78.6 fib extension of that April low to July high bull flag. Now, if we get price action to the upside, we get this 2 down, 2 up reversal, magnitude being the high of the candle to the left of the 2 down, which is also the base of the gap that was left from Tuesday morning. So, right at the 50% of last year, if we don't see a rejection here with resistance, then we're looking to fill that gap and then looking for more possible resistance at last week's 50% line, which pretty much lines up with the gap close. So, we are in the uptrend that we've been talking about from the week, month, quarter perspective, but things have broken down a little bit from the day perspective. We're more in a broadening formation than a downtrend. Well, actually, it's starting to turn into a downtrend, but just want to kind of temper how far we think we may go even with this gap here, right? Looking at the day chart. Right, so we had a small broadening formation get formed in here, the last few days, but obviously broke down below that and locking in a firm lower high here. So we've got this high and lower high on the day perspective. We've got a low and a lower low, so technically a downtrend has started on the day. But again, we want to kind of temper how far we think things may go. This is again another area of support. We're looking at the top of the range from October here. That this price action could be a box of support that we bounce off of. But if we do break down again, we've got a little bit further that we can go. Last quarter's high or last month's low is where I could possibly see us going, testing last quarter's high, and just really firming this up as a level of support and possibly forming out more of like a sideways chop or top of a flag. I don't want to say flag because I don't want to start overusing that term, but you can see we had another, basically like a flag pull here with the flag. So if we do fall back down, maybe that's just a look above and below in this further flag that we have. If we think back to June, what was this? Yeah, June, July, August. We had 11 weeks of sideways action. So we could see some more sideways action here as we digest earnings. Government shutdown is still out there. The Fed saying that another cut next month is not a foregone conclusion, right? We could see people, starting to de-risk a little bit more, bringing us back down into this range, which again is nothing to, get scared of. We looked at the week chart. We'll just take a peek at it one more time, but we can see, we did pop with the the 2 down, right? But we've got so much room that we can go to make a higher low and still be considered in an uptrend. So that's from the day perspective. we could see that continuation to the downside. If we do get that reverse up, get the gap close if we break above last year's 50%, but look for more resistance up here, if not at the gap close. All right. So let's just go to the hard numbers here and look at our notes. Again, this is for Wednesday, November 5th. And on Wednesday, November 5th, there will be 37 trading days left in 2025. The close price on Tuesday, November 4th was 42.80, leaving us in a situation where the week is red and turns green at 49.49, and the same for the month because, of course, the beginning of this week was the beginning of a new month. Again, this expected move, the market maker's expected move for the week, it was plus or minus $5.91 from the close on last Friday. That gave us a range of 53.69 to 41.87, and obviously we're down here towards the bottom of that range. Again, not an end-all be-all. The price doesn't have to bounce here, but around this general area is where you can look for some pretty good support. Now, from the gap that we had Tuesday morning, we've got to go ahead and put that in our notes as well. So we do know where our gaps above are and our gaps below. Actually, we need to change the. This is 42.53 to 41.47. 53. All right, there we go. I forgot to get rid of the gaps the gap that we closed today. But again, we went over the repeatable strategy for scalping, right? Higher lows at or above opening print, we're looking for calls. Lower highs at or below opening print, we're looking for puts. But from the 4-hour perspective, we talked about if we do go to the downside, it's just a two down continuation, giving us a clear entry at 42.53. But we've kind of got to look at our levels here and determine where possible exits are, because it's not a reversal, it's just a continuation. So we've got our targets here at 41.47, which of course is that gap close, and then an extended target of 40.75. To the upside, that would give us a 2 down 2 up reversal. So very clear entry and very clear exit with the trigger and a magnitude. So if we do go above 44.76, the magnitude for that move is 46.88, and if we really start to get some momentum back to the upside, we've got 47.45 as the half gap. We've talked about that in the past. Intraday, a lot of times halfway through the gap can be a temporary level of support or resistance. So we go ahead and leave that on in our notes here. Half gap would be our first extended target, and then of course the full gap close would be the second extended target. From the day, if we go to the downside, again, it's just a continuation again, not a reversal. So we got 42.53 as our entry, and then we've because we are still technically in an uptrend, and from the week and up, and then because the day is in more of a broadening formation at this point, we went ahead and included multiple extended targets for the downside action. So of course the gap close, and then a couple more in case things really start to pick up momentum, pushing to the downside. Again, to the upside, we would have another reversal, 2 down 2 up, triggering at 46.88, and because the magnitude is relatively high, right, that's about $4, and it's in the face of not necessarily, well, I guess we did say that a downtrend did get set on the day because we did have a lower high and a lower low, but depending on what happens tomorrow, we could just be expanding the broadening formation that we had already created, the one that I pointed out here. I'll just bring it up on chart one more time. Oops. There we go. So you can see, let me take this out of the way. We can see that we had a soft high here, right? We had the 2 down, a soft high that went 2 up, but then ended up going 3, or bearish engulfing. So there was a soft high here, and then after this low here, there was a higher high than this high, right? So it gave us a soft broadening formation, and then this low to lower low gave us another broadening formation. So if price would have stayed within here, which it did initially, even with the big gap down, we would be in this broadening formation, but this could be a point where the broadening formation expands, right? Say tomorrow actually does go 2 up, right? That would, let's activate that. That would expand the broadening formation here. And then, maybe over the next couple of days through the end of the week, we push up and make a higher high here. And that would expand the broadening formation up in this direction, right? So not saying that that's what's going to happen, but it is a possibility, right? We don't want to take any possibilities off the table. We want to be fully prepared. So although we have started this downtrend, it is still a possibility that we're just expanding a broadening formation. So we've got to see what tomorrow's price action does, and that'll give us our answer, right? If we continue to go down, then it's no longer a broadening formation. But because we are possibly in a broadening formation and that magnitude is quite a ways away, I did include a couple of intermediate targets for the way up. Now the week, we finally broke to the downside, right, giving us a 2 up, 2 down, triggering at 45.14, and the magnitude for that move is 35.97. So if you wanted to go ahead and break out your puts today, and you could have possibly grabbed some 35s for November monthly expiration, December monthly expiration, and just let them kind of sit there and see how price action goes. Obviously, theta would not be very high. Delta wouldn't be the highest either, but when SOXL drops, it tends to drop pretty fast, pretty quick, which builds IV up, which builds up the premium on those contracts. So you can make a decent profit, multiple contracts, and even with that type of, normally we preach the in the money, at the money, but for this type of play, just because it would be the very start of a downtrend if we are going to get into a downtrend, but we're very far from even starting a downtrend on the week. So if you wanted to take a shot with some cheaper contracts like that, further out extensions, further out expirations, just to see what might happen. Of course, obviously keep an eye on them, and if they start to pull back too much, you want to go ahead and get rid of them. You can always re-enter. Don't take too big of a loss. But if you wanted to go ahead and start to dip your toes into some puts for the November, December monthly, I couldn't get mad at you for it. We already triggered the 2 up, 2 down, so 35.97 would be the magnitude of the move. If we get to any of these extended targets, I would be a little surprised just because of how extended they are, at least this week, right? Now we could get into those next week, but we'll have to just see how price action goes. And because we triggered the 2 down on the week, if we are going to go end up with a green 3 or a bullish engulfing candle on the week, we got to get back up to that 50.76 level. If we get up there, right, we've obviously got our targets, but that's quite a ways away to go, quite a lot of work to do. So we'll just kind of take it as it comes, right? We've got to get the green 3 first before we can get any targets. So at this point, I don't know that we'll get a green 3 on the week, but we'll see what happens, right? And then the month, quarter, and year. I won't go back to the charts. We've talked about how we triggered the 2 down at 33.98 and the 2 up at 50.76. So we're still just an inside candle on the month. And then on the quarter, we're still in this 1 combo 2 down, combo 2 up, right? We're still above 36.15. So again, from the month, quarter, year perspective, nothing really breaking down. And just, again, speaking on the year, we did have the 1 2 up, 2 down, but we end up making a higher low, looking like a nice green hammer right now, and just continuing to try and push up to the end of the year. Now, if the year, if price continues to pull back, the year, turns red, it'd take a while for the year to turn red, 28.13. If that were to happen, then obviously we're going 2 down on the month, and the 1 2 up, 2 down is off the board on the quarter. So we can approach that if we start to fall back into that. But again, for right now, nothing really breaking down on the week, month, quarter, and year. So bulls still, at least right now, looking in control. Things are neutralizing a bit, especially from the day and week perspective, but you can't go just straight up forever, right? You've got to get a little bit of a pullback. Got to give people an opportunity to take profits or de-risk. There's people that are in SOXL from way back at the April lows. It's $7, $8, right? So it's perfectly reasonable to see some sideways action once we get to these more elevated levels, and we've been pushing for a while. So we've been not asking for the callback, but watching for it and been ready for it. We're able to capitalize on it today, and we'll look to capitalize on it tomorrow if we get more pullback or the rest of the week, right? So those are the triggers and targets from scalping all the way up through the 1 year chart. And, I hope everybody enjoyed them, got some good information from them. We try to pack in as much information as we can in as short amount of time as we can, so we don't take up too much time, too much of your time. But again, we do this for you, and if you have any questions or if anything doesn't make sense, definitely let us know in the comments. Give the video a thumbs up if you've made it this far. Again, we really appreciate those who continue to watch. The channel continues to grow, and we're trying to think of something that we can do to kind of celebrate the growth that we've had, celebrate you all, and try and give something away to maybe a lucky winner or a couple lucky winners, a couple people that consistently follow us and interact with us over the time that we've been posting these videos. So yeah, well, that's pretty much the rest of this video. If you're watching this Tuesday night, I hope you get some good rest tonight. If you're watching this Wednesday morning, I hope you got some good rest last night, and everybody's refreshed and ready to do some more trading. So I look forward to it, and we'll see you out there.